Viva the V. That's Ken Fisher's mantra. He has been bullish on equities and says the run is far from over. The key, he says, is to think globally. Ken Fisher is the founder, chairman, and CEO of Fisher Investments, and he joins us from San Francisco. Ken Fisher, welcome to the program.
Thanks for having me, Pimm. Always good to be with you.
Ken Fisher, talk about the expansion that is going on in emerging markets, because several of the stock selections that we're going to talk about this evening, they really have to do with growth in the demand for commodities, right?
Well, when we look at the 30% of global GDP that are the officially categorized emerging market countries, we actually can see quite simply that they both, for the first time, which we're not used to as investors, have internal demand, middle-class demand, and growth. They're actually leading the world and pulling the world along with it. But also, they particularly, because they want all the basic stuff, have to and are investing very heavily in materials of all forms. One of the points that I've made for a long time, parallel to my comments in my Forbes column starting in February of this year, that the rate of descent of a decline does a pretty good job in a big bear market of predicting the rate of ascent, later leading to this concept of the V. The decline predicts the ascent, which really, to this point in time, has only been off by about 6 weeks from the bottom in March 9th. But parallel to that is the point that the areas that did okay in the first half of a bear market but get crunched in the back half tend to lead in the next bull market, at least through the first third of it, and that includes materials. And this is largely being driven in emerging markets, but it's all over the world. It's also in developed markets, too.
All right, well, and let's talk about one of the companies that you want to focus on. This is Alumina. This is the Australian-based company, miner of alumina. They are the production powerhouse for aluminum. They've got a 40% stake in Alcoa World Alumina and Chemicals. Is this an early cycle play for the global recovery in economic activity?
I think it's a classic example because, first off, everyone is very paranoid about oversupply in bauxite in general and refined alumina in particular. And they're particularly concerned because China is going to be bringing on more capacity. The fact is China will bring on more capacity, but that capacity is much higher cost capacity than alumina's and reinforces alumina's position as one of the world's very low-cost producers. This, at a point in time where the stock is statistically very cheap, it's selling at about 70% a book. It's not making material money at all. It will, and the fact of the matter, it's got a good dividend. In the meantime, you're doing a lot better with that than you are with your average bond, and this is part of what I think gets carried away with the rest of what you think of as the materials world, and feeds off of this same fear that people have, which is that we've got overcapacity in all basic materials, which we do, but a recovery takes care of that, even if it's not the biggest recovery you've ever seen. And yet, coming out of emerging markets right now, we have a heck of a recovery coming.
And Ken Fisher, alumina also benefiting from what? The increase in aluminum prices, right?
Which parallel the same function. The fact of the matter is, as the recovery comes along, you just get a natural pickup in prices and volume and capacity, and it's a kind of a threefer that makes, I think, the stock very attractive if you're just content to buy it today and think 12 months from now.
All right, let's talk about a Brazilian petrochemical company, Braskem. They've shown signs in the domestic market of growth. Is this also a play on global infrastructure?
I wouldn't think of it so much as a play on global as it is South America and Western Hemisphere. It is the largest petrochemical firm in Brazil. It's got capacity and ability to sell throughout Latin America, which picks up one of the big hubs of emerging markets in general, and one of the places where we're seeing tremendous growth and we're seeing emergent middle class and internal demand growth. And yet, ironically, it is, behind Dow Chemical and ExxonMobil, the third largest basic petrochemical firm in the Western Hemisphere. So I wouldn't go as far as fully global, but it's a major play there.